Hello world. Who's out there? Hmm. Doo, doo, doo. Everyone's so quiet. It's times like these that markets move. What's going on? Oh well, we'll just chill here. See who pops on. Ask some questions if you do. What's happening over here? So Sol BTC stuck between the trends, bounce up and down based on passing through the cross. Kind of on the range trend, under the other one, under the origin, above the trend, above the origin, just kind of stuck in the middle. You'd sort of expect this to make some kind of choice in the next 24 hours. It's either got to go down, close under something and keep going down, or it's going to pass through. Maybe close up and attack a higher level. Maybe a little bit risk off if it goes up until it hits the rejection, and then obviously risk on again. This kind of tells the story though, because it doesn't really matter what Sol BTC does, and it doesn't really matter what risk versus safety does, because this excludes safety. So Sol BTC might go weak, risk versus safety is kind of stuffing around, but this wants to go up. So total market. And this is the riskier portion of total market, which wants to go up even more. So had that move today, which was we pushed up, we closed just over the top of the range level and then bounced up to hit the top side again. So every time we tap this is acknowledgement that we can go higher. It's when we don't. So like this candle comes down, goes up, doesn't touch, goes up, doesn't touch, goes up, does touch. Everything past here is now important. So if we just hit it, hit it, hit it, we break it. That's pretty much what's there. But the day that we open a candle and we don't come back here is the day that we know that the market has decided that this is too much. We don't want to be above here anymore, and we're going to look for more downwards momentum past that point. But at this point, that's not bearish. Hit, not bearish. Hit, don't hit, that's bearish. Here we go. This is nom area. This is where, if you look at yesterday, this is why markets are just theatre to attract people to do things that turn out to be bad. You create these tops, and that's, maybe you have to be a bit of a cynic, but to trade, but structurally we have retests above these tops. Why come here and not do the thing that you are 95% chance obligated to do, which is retest these? Makes no sense. From a percentage perspective, makes no sense. But if you want to push the price up through here, why use your money? If you do this, people open shorts. And those shorts are in this area. They're liquidations and stop losses because it's above the strong triple top or whatever. And then the price goes down. As the price goes down, these people are like, yeah, we've made a really good decision. We put, geez, that's slow. Why is that so? Oh boy. Turn that up a bit, eh? These people go, oh, we've made a really good decision. And then a lot of them go, oh, look, we rejected the top again. We're fine. They don't take profits. And that's the number one killer for traders is you just need to take profits. Like if you got this short and you took it down to here, take profits. If it goes back up to here, don't go, oh, it's never going to go back up. I mean, yeah, sure, it went down again, but the thing is, don't go, it's never going to go back up, because it might. Went down, went back up again. And you got guys like me that are taking entries on all sorts of weirdo timeframes. Where's that trade? Somewhere in here. There it is. So we got a level from back here, which was an entry here, which was a TP here. So you just don't necessarily know what the market's going to do, and it's not going to do what it looks like it's going to do. That's the key thing. What it looks like it's going to do is to induce you into making a choice that puts you in a position that enables them to do what they're really going to do. What might they really be going to do? Well, we had a 2-week trend down here. We broke through it. We bounced off the backside of it. We've come up over the hold. We're probably going to the 2-week TP. Probably. No? But what does the market want you to think that it wants to do? Well, it wants to think that this is a safe place. It rejects. What's it doing now? Don't worry, cope. You'll be fine. You're not going to get liquidated. You're short safe. You're real safe. You shorted because it looked like it was going to be solid. You could have scalped, because when you're scalping, all you're doing is, like, a scalp is basically taking a trade on perception. It's this level will reject because that's what that level will do. But you got to get out of it, because at the end of the day, it's not necessarily the direction that the price is going to go in. This down here set the direction. This recovery, because it's not an engulfment. If you think of it as just a down candle and an up candle, that's not an engulfment. But look at what's behind it. So 1, 2, 3 candles. 1, 2, 3 candles. So if I was to then go, well, actually, it is an engulfment. Where did I start? Well, my open would have been somewhere, what do we got? 2, 2. Where's my wick? Actually, we'll go with wick. Highest wick of 3. 2 bottom. 3 up. Engulfed. Highest wick of 3 down. Entry. TP. So fractally, it is an engulfment. It doesn't look like it is from a normal perspective that we typically trade on, because we don't do advanced masterclass shit every single day, but that is a trade. And here we go, and here we go. Money made. Come on, who's out there? Comments, likes, subscribes. I'm at 700 and something people now. It's pretty cool. 6 of them join a live stream. You are the strongest few. What's going down? Nothing's going down, it's going up. see. Hello. Brain explosion. Yes. Yeah. When you stop looking at time purely as just candles on a chart, like, did that get engulfed? No. Did it get engulfed? Yes. When you stop looking at time as to what they present you and you look at time as in the fractal grouping of everything, it really changes what you see. And then eventually you just can't stop seeing it. So the wind down, the work wind down. Yeah, I used to come home and need about half an hour for that. Sort of long day at work, didn't want to talk to anybody. Now my long day at work is completely antisocial and I don't talk to anybody. Half the time when I do my morning live stream, I cannot speak. I open my mouth and I'm like, blah, blah. I usually have to hit the stop recording, start recording button about 4 times just to actually get the words "welcome to your daily update" out. It's actually the weird thing about trading. You're against everybody because it's peer to peer, right? So you're literally against everybody, but you want to have a community. It's kind of weird. But what else? What are we doing? Now, what's Bitcoin up to? Tappity tap tap. Get back up there. Yeah, okay. Maybe all of the time. Yeah, definitely all the time. Wake up, can't speak. Let's see if this gives anyone an epileptic fit. This is the database for the Origin scanner rebuilding with new state logic, which will allow us to actually predict Origin breakouts. So not just trades off support or rejection, but actual breakouts. So this is rebuilding at the moment, which is quite cool. Yeah, like I don't think they look like trash. I think they look like they want people to think they look like trash, if that makes sense. I haven't really looked across other markets, but in the ones that I want to make money out of, I look at them and I go, well, this wants me to put shorts in up here and look at what it's doing now. BTC's definitely got a bit more strength at the moment over risk assets, which it's probably because this needs to kind of resolve itself, but I'm going to get the monthly close soon. So the monthly closes. Don't know whether I even like that being blue, because if that's blue, it will actually be the first monthly trend break on that interior since 2021. How's that? See that December 2021. Did I get that right? I did get that right. December 2021. We might get the first monthly trend break on safety assets since December 2021. And unfortunately, it will be above trend at this point. What we really want is for that to have some magical tweet pump and open on the wrong side of that trend. Or it's tweet dump, I guess. Pump of risk assets, dump of safety. If it opens on the wrong side of a broken trend, wow, that literally has not happened since that trend was established. Notice how shit and weird and choppy this entire market has been. This was our previous market. Yay! Long your alts. Boom. Look at this market. Do we long? Do we short? Do we long? Do we short? Do we long? Do we short? It's just been an absolute pig. So when people say, "Is this different?" Yes, it is different. Like it has been different. It's just been rotation. Rotation with the basis of growing safety is kind of what it's been. This was just safety risk. This was BTC alts. Pretty straightforward. This was, we want to grow BTC through harvesting risk. And it just, wow. So yeah, it has been different. The double crust. Double cheeseburger burger, please. Don't know how that got stuck in my head. We should probably check out the 3 month, because we've got that 3 month close. The heck's going on there? Can you imagine what happens if we open in between those two trends? Dump and pump, or pump and dump. Don't want to open inside that hold. You want to definitely be under that. What if that's got any juice left? That origin up there. Didn't quite tap it there. Oh, that's weird. Short-term liquidity just changed. So everything above 89.5 just flipped over to high time frame because it's been open for too long. On Sol, that is, sorry. That's this screen. Funny story. Just learned how to add more screens to the recording software. Oh, you 100% this is a bull trap, but you can't stop making money. Like, if the price is going to go up in a bear market because it's a bull trap, you're still going to long it. Look at this is the beauty of like just 1 minute charts and strength. No engulfment. BTC, Sol. a lot of the time things move together, but when you see the lowest time frame moving more to one side than the other, it sort of gives you an idea of where strength lies without even really needing to look at your pair charts. Oops, wrong one. Yeah, so this is just reset the top here because this has appeared over here on the higher time frame. So shorts are feeling pretty happy. For this to have a good 3-month close and not have some kind of pump and dump play out, it's got to get quite a bit higher. So 71.03, that kind of thing. Woo, 6 viewers, 3 likes. Living the dream. 7. Who just joined? You know, got any questions or anything? Because I'm waiting for a database to rebuild. Not much going on. Look at, in hindsight, you look back at these markets and you just go, look at what we've just been through. Why do we do this to ourselves? Thank you. Thank you. What Tesla's up to? This looks nasty. What can we expect Tesla to do? Well, I guess that depends on time frame, and it is very, very hard to deal with stocks, which is why I've never really been hugely into trading stocks, because there's all these gaps and open versus close. You can open below a level and then close. Sorry, you can close and overlap engulfments, and it's just really, really, really hard unless there's a heap of volume in something and it's very much fluid and moving the way that a 24/7 stock would. It can be a little bit tricky to deal with stocks on a daily, even a weekly can be a little bit tricky. But what is it doing, in my opinion? It's doing its lower level retests. So, like if you look at, say, Tesla on the 3-day, we're down inside the 3-day hold at the moment. And there isn't really a continuous flowing 3-day on Tesla because it's not open for 6 days. It's open for 5. And it's definitely not open for 9, right? So like it doesn't really have the ability to work properly on a 3-day, but one way or another, it has closed inside a 3-day control candle, which controlled a range. And if it stays inside there, then it's going to test the bottom. Now, why would it want to do that? Well, you've got this range down here, and it's been broken, and it's never been retested. So that's, say, 340. So you could probably, I've never really tried this, but you could probably look at things like a 5-day chart and sort of, yeah, I don't know how you do that because they start on some start on Mondays, some start on Tuesdays. It's a little bit tricky, but if you looked at it from a 5-day perspective, it's under trend, it's pushing on trend. There'd be a range in here, which is this, which is bigger than the weekly range. So your 5-day range is bigger than the weekly range, and it's under the level 2. Looks like it would potentially open under the trend, well, above one, under the other. So if it ends up opening down in this little air gap down here, then you'd expect it to push back down here to do these retests. And these retests are 90 to 95% obligation, so that means you're sitting down here at 330s. It's also really cheeky, but it looks like it might be inside the control for the range, which is 355.39, and the price is 355.28. So based on that, yeah, it looks like it wants to open maybe under trend inside the control of the range, do the retests, maybe test the bottom of the range, which is not that different to doing the retests. Then it's stuck under trend again. So it really comes down to whether it can actually break through the trend using something inside this hold. So if it doesn't, well, it keeps going down. There's levels like this have been retested. Most of this on a 5-day perspective have been retested. You don't, like the origin of the range is down here at about 217, 216. So that's the current 5-day origin. I don't think there's one in here. What a mess. Distribution. Worked with distribution. Broken, tested, no. So untested support for the entire range is this 216. So if it keeps breaking down, it'll come down to 216. When will the new origin scanner be ready? Well, it's kind of ready now. It's just rebuilding the database. It's yeah, I stupidly left the debug on, so it's probably going to take a little bit longer than if I'd turned that off. So this is it's going for it. It's got to rebuild all of the history on 540 tokens, which can take a little bit of time. I think the last time it took about 400 minutes, whatever that equates to. This time should be faster because this new state engine works changed condition forward. So what we'll be able to get out of this moving forward is actually, have we recently broken? Have we not? So, and we'll also be able to track time frame. So, for example, we'll be able to generate an alert that basically says the highest time frame of any given level is X, and we have now broken that. So therefore, we will have a breakout to the upside or the downside. So we should be able to get some more trades off this new version, which is rebuilding as we speak. And the hold level thing, which I've got, is just insane, but I want to fix this first. Get this 100%, and then we'll do the hold level thing. The hold level thing is, yeah, just nuts. I've been working with it on the lower time frame the last few days, which is how I got like that 11-hour origin trade and various other bits and pieces. So there's a new lower time frame version of the alternate timed indicator, but I've only worked out 4 time frames so far. So got to work out the other 19, and then we'll release that to all the CSV members. But yeah, it's hard trying to work out exactly where they anchor a different amount of hours. Very, very hard. It's easy when it's a factor. They can't mess with factors because they always start and stop as a factor of their parent. But when it's something that's not a factor, it can start and stop it any kind of random time, and you've got to find where it starts and stops. Let Tesla dump more. Yeah. Oh, tried to sell Tesla. Yeah. I've had a couple of weird things like that in my career with systems that break down when things are really important, or network outages, that kind of stuff, which is really annoying, but it is what it is. I'm kind of looking forward to the day that all stocks become 24/7, but then I'm also not looking forward to the day that they become 24/7, because the current mechanism in play is actually synthetics are 24/7, and buying and selling of synthetics actually does not increase or decrease buying and selling pressure on the underlying asset. So it's a real odd transition, because you like the way a synthetic is set up is, let's say XYZ Industries goes and buys like 1 million Tesla shares. They then offer trading on that 1 million Tesla shares. And if too many people long, they would have to go and buy more to meet their legal requirements, which means if too many people push the boundaries of the synthetic, then buying pressure exists because they have to go and buy more within a T+1, T+2, whatever legal requirement. If too many people short it, they have to do the same thing. But the thing is, if volume stays within norms, it means the price is going up and down on a synthetic stock completely artificial to that of the price of the real stock, because it's a secondary level trade. It's kind of like how mortgages exploded in 2008 because everything became a secondary. So instead of one mortgage meaning one mortgage, there was one mortgage as a security, and then there was a back security, and then there was a back security, and there was a back security. So the next thing you know, one mortgage equated to 5 times the market value. And then when it all turned to shit, it really turned to shit. And that's effectively what they are currently creating with the whole 24/7 market, because it's not the real stock that's 24/7, it's a synthetic version being traded. So it's don't know, it just sort of says to me massive blow up in the future, but we'll see. $215 on Tesla? Probably. It's see, the issue here is synthetic doesn't really go that low, so it's pretty hard to work that out. But you could, let's see. All right, zoom out, 6 month. So first thing really subtly to look at here on the 6 month chart is that we have not broken this break level, because that opened just under it. So straight off the bat, you'd be thinking 300 or less. So that's straight off the bat. Yeah, the Big Short Mark II. Stock market, Big Short. Everything converts to synthetics. They increase the amount that's actually out there versus what's really out there, and then it all turns to custard. Very possible. Oh, excuse me. Vodka. So we haven't broken that topside break level. We haven't broken this bottom side break level. So that kind of indicates we could go down. what would catch us if we fall? Let's see. Ooh, that ain't good. I mean, you've got trend down at 220. Is that what everyone's saying? 215, yeah. Could be about right. You got a trend down there at 220 to 2. Depends when it gets there. 6 months. How many have we got to go? 3 months. So we've got 3 months to go. So if it goes in a straight line, straight down, which it probably won't, but if it does, 203. If it takes a little bit longer than 3 months to get down there, then 217. So yeah, maybe that would be an interesting buying opportunity about that trend. And then you would look, depending on how long it lives here, this would be your first resistance, this candle here. And if it just stays down here and never really pushes back up, then you just get out of it as soon as it hits 288, because it'll hit it and then it'll break the trend and come down. But if it hits it and has some big bullish bounce and comes back up, then sure thing, look for a higher target. But yeah, that doesn't look very healthy unless it gets back up over the top of that trend in the next 3 months, or at least over the top of this old break level, 402 in the next 3 months. See what the 3 months doing. And the 3 month close, oh, beautiful. Look at this. I shouldn't laugh at this, but it does bug the living bejesus out of me that people think that fundamentals have everything to do with stock price. And so when large key influencers tell you should be buying Tesla, and if you close anywhere under 382, you're creating a potential range move, which could be nasty. I mean, minimum 311. We've already seen there's reasons to go below 311, but there is a range trend coming through here that might support it on the 3 month. So maybe you get 311, 300, a dive down into here. We got this prior broken trend that it moved so far away from the trend before breaking that the next candle to hit that is like 135. Like, there's a lot of reasons for this just to turn to absolute shit. It's where's your origin level? Well, your origin's here at about 206. So I don't think there's a high time frame 3 month origin above that. There's a broken one for retest at 300. So you've now got this super amazing reason to come back to 300. And if that retest does not move up, then 206. So when you zoom out and look at this, it looks like it wants to fall off a cliff big time, even on the high time frame. Don't watch the latest update. I recorded it like 2 to 3 times and it was really awesome, and the computer basically crashed and corrupted the file like every single time. And then I just did like a really fast version of it after rebooting everything and closing everything, and that was good. But it was also nowhere near as cool as the first one, or second or third recording. It took about 3 hours of my life to get out one video that was like 20 minutes. It was, yeah. Got to rethink things. Maybe buy another computer. This computer is kind of beefed out to the max, but 4x 4K monitors plus all this other stuff that's running there, it's getting a little bit laggy. So might have to buy something bigger. All right, it's not about Tesla. Yeah, first area of interest would probably be down here about 311 to 300, depending on how it behaves. And then beyond that, next level will be down here at about 206. So that's Tesla on a really high time frame. Commodore 64. I'm old enough to remember that. BBC Micro. Remember that? One of my first computers was a BBC Micro, got it secondhand, and the problem with it was that the tape storage device was faulty. So if you wanted to run an application on it, you had to type in pages of code just to recreate the application, to run the application, to do whatever you wanted to do every single time because you couldn't save anything. So it was, you want to play Pac-Man, you literally had to type in pages of code to play Pac-Man. By the time you typed it in, you were too tired to play Pac-Man. It was like a sick joke. Yeah, have a computer that can't remember anything. But yeah, we were poor, very poor. See this? This is speed rejection, speed rejection. First candle in the range. Wick, close below. Second, instant origin rejection level. Same thing. Reject, down. Scalping 101. When you see that happen, it's like kind of the chart's way of saying, oh shit, we left it too late. We were meant to be building resistance, but we didn't do it. Better go down. Yes, before MS-DOS. Yeah, C64, Amiga 500, BBC Micro. Those were all the things. One of the first computerized, I'll say computerized because it wasn't really a computer, but one of the first computerized devices I ever completely disassembled, reassembled, and created something out of was actually a semi-digital cash register. So a business that had gone into liquidation, and they had an auction for all of their assets, and I bought like this cash register that was broken for about $5, and yep, stuffed around with that for months on end as a good old hobby. First major trade I ever did, not stocks, not crypto, nothing with charts, but one of the first decent trades I ever did was during the old PC boom, and there were all these companies making clone computers and making tons of money, and then there were too many of them, and then the market changed, and they all started going out of business. And as they were getting liquidated, all of their assets were getting auctioned off, and I went to this auction for this company called PC General, and they were auctioning off their parts by pallets. And I bought a pallet load of Pentium motherboards for about $400, I think it was, for an entire pallet of motherboards. So it was like only a couple bucks per motherboard. And then over the next, because computers didn't change that quickly back then, over the next sort of 6 to 12 months, sold all those motherboards for like $100 a pop, and that was a deposit for the first house. It was relatively cool. The things that change your life, eh? Okay, who's ready for it? What are we doing? Get rid of that. We're waiting. We're waiting for the market to do something more important than bounce around for 90 cents. What fits into... it's not that. What now? $83,883. Yeah, okay, not quite. Didn't quite touch. 83,886 versus 83,883. Okay, so not a level. By the third decimal place, I pronounce you not a level. See this one across here? Break, 2 candles, which means pure to 1 hour. Touch, 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 touch. Origin creation, rejection. Short. No. Siren. Okay, let's look at Siren. These are all the poopers I've been scalping. And copper. Thought I had Siren. Nope. Oh boy. Well, this just wants to hurt somebody. So first glance, when you just see a token that's doing this, just flat like that, something's coming. So let's have a look. Bigger stuff. Wow. Yeah, okay. Sucks to be whoever didn't buy the bottom. Got stuck at the top. Look at that. Biggest volume bar on the entire chart is that. Not this. That. Sometimes when you see really big volume but little price change, it's a pretty good indication that something's about to happen. I don't know how the mechanics of that works, like how do they actually manage to stop the price from moving, but do what they do? No idea. So somewhere in here there'll be this, which is your first origin level. Got broken. There's your break. There's your break. Boom. That one as well. So what did that do? Yeah. So this is an example of a reverse hold. So you notice it never managed to get a close under that line once it hard closed in there. So this candle, which should be a hold, which should create a rejection, became ultimate support for a really big pump. Would have, in the original, that would have been your trend to target. It went miles through it, so pretty impressive. Still above it, actually. I don't know if I'd short that. Not when it's above that. If it closes up here and bounces off the top of that thing, it goes for another joyride. It's another way you could look at it. That was your first range trend. Bounce into the hold, locks into the hold, test the trend, test the trend, test the trend, test the trend, eventually just explodes. So that's another way you can look at it. I guess what everyone wants to know is that going to come down? Could it be a short? Okay, maybe. If this pulls down in the next 17 hours and opens on the wrong side of this trend, yes, it could be a short. And it could be a brutal short. You know, like eventually all the way back down here, because going up like that, there's no support. The support that it will try to generate is support by staying above the trend. So watch very closely. It may. I wonder if there's anything bigger. It's 2 month. Nah, it's just exploded. Yeah, that's your trend. Exploded off the range trend, punched it through the topside trend. It either closes above here and tries to make another move up. And if it does, whatever the next move up is, probably won't be higher, but what it will possibly be is some kind of trend in here, which gives you the ability to create your first downtrend. Let's say it does a half wick fill and ends up here, then that could end up being your first downtrend. Something like that. Brutal. It would have been pretty hard to catch that. There's nothing good about that. The way that is. Just looks like it wants to open on the wrong side and create its first break level. Hey, I guess if you wanted to scalp it on a lower time frame, you could probably take this weekly and drop it to a daily and just see what you've got there. And you've kind of got nothing because it's just on the daily. So you could try a 4-hour. There's nowhere to move it to on the 4-hour. There's nowhere to move it to on the 1. It's just basically hugging that trend. So you've got, it's a pretty hard token to take any kind of scalp on. So we've got a 15-minute. No, don't even have a 15-minute. So your weekly trend is basically just being hung to. So 5 days from now, it's either going to break that completely or it has to really get back up here and open the new candle over the top of it if it wants to keep coming off the trend. Over the next 5 days, if this candle body starts to get bigger to the downside, then you might be able to array the trend and start scalping it, but there's nothing there right now. It's either going to break and fail or down and create some lower time frames or bounce. Madness. See if we can find an example of how you would scalp something. So let's say this trend gets created here to here. And we get rid of that. And then we have a look at our daily. And we find the position of our daily, which is here. And we look ahead and we go, has there been anything? Nope. So we try a 4-hour. Okay, so you got a 4-hour. So you could take this to here. Okay. And then you could take the first touch of this 4-hour trend and target the hold area. So you move the trend, you long this candle right here, which is 3 candles later, and you TP into this. There. Hope this is a good percentage. 9%. That's not bad. So you've got to have the ability to move the trend in the first place if you actually want to be able to take a scalp on something that's moving. So you could have done it back here, but there's just nothing now. It's just moved too fast, too hard. It's just testing the weekly. It's either going to break the weekly and go down, or it's going to go up. Or as more time develops, it might create something. So you can check it every day and just see if there is a lower time frame level within that weekly trend that you could actually take a trade off. But that's a pretty insane pump. God, imagine the poor buggers who bought up there. They're fucked. Can you say that on a live stream? You get black mark. Hmm. Dum 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 dum. All right, I'm gonna go to the bathroom. Find another drink. Feel free to put questions in the chat. Be back in a moment. There's 190 Sol on cards. Better be. It's haunting my dreams. Let me show you. Let me show you about 190 Sol. So, which one of these charts? Probably one of these. Okay. Right. So, if we look at Sol from a market cap perspective, then no, it's not. Right. So, this is where like the massive overinflation of a token can really mess with the price charts. So if I look at the levels on total market cap, we created the range, we rejected, we came under, we tested, we rejected, and here we are now at level 2. So based on this, we could, go to 0 effectively, or at least 15 billion, which would be the next level down. So, and what are we looking for? We're looking for probably a trend change in a 17 hours, which will come to the bottom side here. And if we get the trend change, we might get a bounce. And that's if we look at it from a market cap perspective. So then if you look at it from a dollar perspective on the monthly, and this is kind of why it's a bit of a dream haunter. As you can, sorry, that's Sol BTC. Sol. Where are we? Here you go. This is why it's a bit of a dream haunter. You've got these levels that do not look like they are retested at all until we get down here. And we've already shifted the trend to the bottom side from a dollar value perspective. And if we create a new trend, it will be up like this and we'll be on the wrong side of it. And that's all very, very negative, right? So that's all just all bad, right? Already under the 2. So now go back to the market cap. Well, the market cap has retested the levels as it's come down, which means you don't really have the reason to go back up to do the retest. But then on the other side of it, the market cap is also the thing generating support at this level. Whereas the dollar value based Sol never did the retest, which makes you think, okay, we've got means to come back up here, but it's also not generating the support. So that's why it haunts my dreams. You've got one metric that says you should go back. You've got another metric that says you've already done it. And the key thing is that there's just so much inflation on this token that it's hard to tell whether you should be looking at the dollar value. Half of the drop in value you see here is just because they keep on printing. That's the short version. When a token is hugging a monthly trend, yeah, you could. Like if you've got a bias, so if it's hugging a trend and you think it's trying to break the trend and that's your bias, And every time it pulls away from it and you get a decent 15-minute level, then you could take the 15-minute level back to the trend. Absolutely. Do you ever think about how things would change if FibLab grows a lot? Yeah, I agree. I don't really want it to grow too massively. I was thinking about it the other day, like at some point you've got to cap things, well, I guess. But also at the same point you got to look at it. It's a bit of a different community. I was in a community once which has recently just completely imploded, which I heard about third hand. And the reason I'm not in it anymore was I got banned out of it because I basically criticized the people that were running it. I said, like, what are you doing this for? Like, you just got all these people, you've strung them along, you're not teaching them anything. All you're doing is basically getting people in here so that you can make money off them through referrals and various other bullshit. And when have you ever decided to come out and actually say, take this trade and here's why, so that the followers would learn? But they didn't want that, because at the end of the day, if the followers learned, the followers didn't need to be there anymore. And I think that's probably the thing that would affect FibLab quite a bit, is everybody in there is relatively open about saying, this is why, this is how, this is why we're making this choice. And eventually, if people follow that and get good enough, they don't really need to be in there anymore, other than the cat memes and the other cool stuff, and the fact that there is a lot of boredom time in trading where there's just nothing happening, and so it's always nice to be able to go somewhere and spam some shit. But that's kind of the difference. Communities that massively grow are actually probably the ones that don't give their followers much. Like if you look at IA, everybody hangs out in IA waiting for one of his trade alerts, not for him to actually teach people how to do those trade alerts, but they're all waiting for him to take the trade alert and give the trade alert, and that's why they hang out there. Even though the majority of the time his reasons for taking trades turn out to be epic fails, but it's a different community. FibLab's more about educating people to become self-sufficient, and because of that, I don't think it will ever become massive, because there is a certain level of competency you require to become successful as a trader. And once you've achieved that level of competency, you don't really need any more. It doesn't change. You don't need further certification and education as if you're a gas fitter or an electrician. You just, once you know, once you see it, you see it. Once you are profitable, you're profitable. You either get past that boundary or you don't. And yeah, so I don't think it's ever going to be a massive problem. I think there'll be people maybe there'll be cyclic amounts. I think, like, probably completely at the wrong times. There will be a massive amount of people that probably join at the top of the next bull market because they all want to become millionaires, when really they should have joined us when it was really boring and slow, like the few people that are in here now. There'll be that kind of thing. And yeah, it'll be interesting at that particular point in existence when you're sort of having to tell them not to do what they think they're here to do. Like, you can become a millionaire, but you're going to do it by shorting, not by longing, even though you're only here because you think it's going to go to the moon. So yeah, I think it'll be different. Next question. Yeah, market cap sucks. This market cap looks just dead. Versus, where are we? Back up somewhere in here. Yeah. Market cap did the retest. Dollar value didn't. Excessive inflation, excessive printing. Retire on Sol. Dig. retire on making 1% a day. That's what we need to do. Some days you'll make a lot more, but just retire on that. So intention, 57 minutes. Does it come back and touch that 1 hour break or not? So like taking like the whole poker players thing and trying to read market tells, like what is the market telling you at this particular moment? It's saying we're below the break, but we've touched it every single time so far. So the only time it really exposes anything as a poker player is if it doesn't come back and touch this. But at the same time, it exposes everything as a poker player if it just keeps touching this. Because if it just keeps going there, it's choosing not to create resistance at that point. It's saying that I'm happy to buy up here, I'm happy to buy up here, and although people are happy to sell there, I'm happy to keep buying up to there. And the day that the buyers weaken is the day that they are no longer happy to buy up there, at which point the sellers go, oh crap, I missed out on selling, and that is the psychological reason why that would go down the next time it touched it, because that'll be like, oh geez, I missed out on my last opportunity to sell because I stopped coming back here. Oh, it's back. Okay, I'll sell. Origin level. There's a amount of psychology involved in, what is happening right there. And if the market just keeps doing it, tapping it and tapping it and tapping it, eventually one side has to get exhausted. It's either going to be the sellers or the buyers. If it's the buyers, it becomes an origin. If it's the sellers, it breaks the break level. Pin that somewhere. Well, if it keeps tapping it and then coming down, what it basically means is that psychologically there's still buyers that are happy to pay up to that price, but there's still sellers that sell when it gets there. If it stops getting to it, like say it closed exactly like what you see here now, what that means is that buyers have stopped being willing to pay the price, they've exhausted. And then at that particular moment in time, quite often what happens is either you sort of get two types of seller. Psychologically, you get the ones that just give up waiting and the price just keeps dumping down. And that's kind of why like sometimes origin levels get created and the price just runs away from them straight away. And then you get the other type of seller who's like, no, I'm stubborn. I agree now that I should have sold, but I didn't sell. But if it comes back to this price, I will sell. And that's the psychology really of an origin level, is that if it keeps hitting it, keeps hitting it, keeps hitting it, one side needs to wear out. If it gets above it, hard closes, that means that over that entire time period, people were just happy to buy at the higher price than the level, and that's what breaks the level. And then you get the other people stepping in because you've got all these buyers that are waiting for lower prices. But if it closes above a level and stays above a level, those buyers go, oh, FOMO, damn, it's going up, I'm going to buy. So that's the psychology of levels breaking, is you've got all these parties that are always on the sidelines, like they're waiting to sell, or they're waiting to buy, or they're chasing the buy, or they're chasing the sell. Like, it's just different parties basically based on psychology. And the lines on charts are pretty much telling us that right now there's not enough buyers to bring it up to this line. But we've got 51 minutes. So the next 51 minutes, the buyers that are on the sideline might choose to buy. Or the sellers that are on the sideline waiting for the higher price might choose to go, oh, it's not coming back, I'm going to sell. Once all of those sort of emotional buyers and sellers are out of it, it just comes down to the stubborn ones. The stubborn ones are still sitting here waiting to sell. The buyers who are looking at this lower price might see that it hasn't come any lower. They might buy. They buy it up to this price. They run into a bigger amount of stubborn sellers, and the stubborn sellers dump it down. Welcome to our origin level. Yeah. The real $1,000,000 question is, does reasoning create the price, or does price create the reasoning? Or does price action, I should probably say, rather than price. Does price action create the reasoning, or does reasoning create the price action? Because years and years and years I've been doing this, I've seen this too many times. This is nom nom. This is where everybody thinks price will not break, because they create a top, they retest it, they come down, they hang out down here. Everybody goes, oh yeah, the market's screwed, the war's on, oil, blah, 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 whatever. We're going to go down here. And they all short, and they put their stops above here. Now, I fully agree we're going down, but I also look at that and just go, that's absolute theatre. There's nothing that stops someone from opening a couple of $1,000,000 position in a low liquid market, pushing up into here, and then opening a $10,000,000 position into all of these four cells, which will keep the spread tight. Because if you open a really big position right here, problem is the spread does this. But if you end up in this area where everyone is getting liquidated, their forced sells create the downwards pressure for you to open the upwards pressure. So $1,000,000 market order, boom, into the liquidations, it pushes the price up, the sells push down, you open $10,000,000 order at a tight spread because of the action of ups and downs, and then you do that and you take your short down. So yeah, sometimes I wonder, is this created to create what people want, or is it created because of what people are thinking? It's hard to know. I've never really thought about the psychology of range trends. And I don't even know if there really would be anything to it, because psychology kind of only comes about because of things that people can see on a regular basis, and most people, even a lot of traders, do not even bother looking at trends. They look at just horizontal levels. So psychology typically comes about from things like round numbers, $100, percentage differences. So like if the price has been at 100 for a long time and then it goes to 200, well, that's 100%. That sort of thing. That's where psychology usually comes into it. Range trends, I don't think, are something that probably has a huge psychological basis behind it. Most of the price action that's created is created by things called AMMs, or algorithmic market makers. So, like, a lot of people would buy a token and then watch the price instantly take a, not necessarily a huge percentage. Sometimes it might just drop by 0.5%, because you got to remember, if you're dealing with like an account that does 100 million a month, you could be paying on a normal exchange that charges fees, you could be paying no fees, right? So the algorithmic market makers, if you put a buy in, you are probably not buying off some other peer-to-peer trader who is selling. You are probably buying off a market maker, and they will then want the price to go down by, say, 0.5%, so that they can sell what you bought, or sorry, they can buy back what they sold you and make a profit on the spread. Effectively, they control the spread. So they buy and sell, you buy off them, they create the spread. The spread is their profit. And that's, in the bigger picture, why sometimes you just open a price and then watch it go a little bit further down. And it's also why, if you try to get the absolute most greedy final decimal place entry, you never get a complete fill, because there's bigger powers that are going to make sure that that doesn't happen, because they want to make money on the spread. So it's that sort of thing that goes on, I think, with range trends. Range trends are more a algo thing. I don't think there's any real human psychology behind a range trend, because humans just don't know that they exist, if that makes sense. Signed on from my girlfriend's account, same time. Oh, hey, how you doing? Got 11 viewers. It's like peak of the bear market. This is awesome. What's going on? All right. Yeah. What time is it? So time often plays a factor. 7:17. What markets do we have? So London's kind of just opened. Can't really trust a lot of what you see in price movement around the beginning of markets because quite often it's designed to get you to take a position in the direction that they need you to take it. So it's usually good to skip that very first part of the market or that little bit before it. What else? What were we watching? So, dying. Yeah, the bros will come back. The bros will appear. It depends. Yeah, the crypto bros. Most crypto influencers right now are just become like war commentators because that's where all the narrative is and that's where all the engagement is. Um, would I take trades origin to origin? No, no, not really. Because the thing about an origin is an origin defines a boundary of a range. Um, you will typically get the first bounce between origin to origin, and then after the first bounce, and that's often the one that creates it. So it's not even an origin at that point. It's normally a bounce between an origin and a break. So one break will become an origin, it will move to a break. That break will become an origin, and then after that, you probably won't revisit the same two over and over. What's more likely to happen is that one side will, both sides will create a hold, and one of those holds will hold, and that will get the price to ladder up towards the other origin. So, at most, you would look to take the very first origin creation into the first closest break, and it might go through it to the next break, but you don't know that. So you just take it to the first break. If that break becomes an origin, you would look to take that origin to the lowest hold because that hold is designed to try and ladder the price up. If that hold holds, you could look to take it back to the origin. So it's really at the very, very early stages of range creation, you don't know which way the range is going to evolve, whether it's to the upside or the downside. But within the first couple of bounces, you know, because it's either going to end up traveling. And typically, what then ends up actually happening is it doesn't travel between the origin and the origin anymore. It travels between the hold and the hold, and the hold and the hold keep the price compressing until it gets to a really tight point that one side has to break. And then once it breaks, it travels to either a hold that has not been tested or it travels to a break. Sometimes it creates at that point another origin, which creates a range within the range. And then you get compressed ranges and tighter price action until eventually the damn thing just breaks. And once it breaks out of one side, what it's almost like watching a line of dominoes fall. Like when one origin breaks from the compressed range, it typically just blasts through the next ones and exits the whole thing. Is there some time? Yeah, time. Time creates strength. So the longer something takes to get back to a level, the more willing and desperate people are to sell when it gets to that level. They've been waiting a long time. When you give them the opportunity, they dump or they buy time. Time is the thing. There's only two things on charts: it's price and time. That's it. Everything is just related to the how time and price interact. So Actually, so interesting thing about trends, right? So trends are related to time as well. So let's say this line and this line were your weekly trends. Let's say you opened a weekly candle right here, brand new week. The daily trend would actually typically be something slightly higher up, and the 4-hour trend would be something slightly higher up, and the 1-hour would be something slightly higher up. So when you open really close in time to a trend, you can normally escalate through it. But more often than not, what ends up happening is you come back in under the weekly trend because you open from the wrong side. But it gives it the ability on lower time frames to push through, and that's why price pushes through trends. It's because of where it opens and how long it has to go. But if it opened here and took a straight dump down, and this was the last 5 minutes of the week right here, and it hit that, the only option it has is to bounce. So trends in time. And it's why a lot of the time they'll push the price right to the edge of a trend on the close of the time frame, because it gives flexibility to do that, or do that. They can do whatever they want. It leaves you in a position of not really knowing, or when it's going to really break out, what they'll do is they'll push it right to the very edge so that it opens on the other side of the trend, and then it has a lot of scope, to really go for it. But trends and time also kind of interact from that perspective. What's next? You all keeping up, I hope. This database is finished building yet. Still going. Jeez. Takes a bit of time. Ooh, it's big. Yeah, it's big. That's the multi-time frame confidence report running on the levels it's already got recorded, which is kind of insanely large and still going. So it's nearly there, I think. So if you look at, say, this, we were at on Sol on the 1 day, there's a few different levels of, oh, come on. Right. Don't trade and drink. There's a few different levels of resistance. So one is this control. So this fully engulfed candle, which was the control of that entire range. And ever since we've been below that, you can see it's been resistance. Likewise, you've got this candle where we close below the wick. Now, it's not really a control yet because it hasn't engulfed it. So it's more a case of, does it close outside of it, come back in, and then make it resistance? That's the kind of thing which you saw on, maybe I'm going crazy, somewhere on the weekly. Yeah, that's the kind of thing you saw here on the weekly with Sol BTC. It engulfed it ever so slightly, dipped in, stayed inside, and then it became resistance. And that's kind of why it's trying to reverse at the moment. But it's got a trend and blah, 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 and it's got the bottom here, and the bottom of this candle is already polarized because of this work and so on. So let it do its thing and it'll bounce. But where was I? Range, controls, polarization. Losing my train of thought. So yeah, you've got, that's total market cap. Yeah, okay, sold daily. So you bounce off the trend, you find the resistance, you've got trend resistance because of the stupidly long wick on this candle. You're still inside the control, so that's rejecting. What's next? Well, if it closes up over 83,185 tomorrow, that's what's next, because then it's regaining a level. And from there, it can try to push up, and sure enough, resistance, blah, blah, blah. But if it closes over this, you could, if it does it first thing in the day, and if it gains momentum first thing in the day, and this is where the time factor comes in. This is resistance. But if it sneaks right here and trolls and closes just over this tomorrow, and then volume comes in right at the opening of the new day, and the price starts pushing up, then it will probably come here because it has time. But because of where it starts, it will probably end up coming back down as well, closer or into the day after it's achieved its target of testing the next resistance. If it closes under the first resistance in that day, then it may not get back up to that second resistance again. And that's not 100% because you can see it's done it in this particular 2-day period. It's come up here, it's tested, and then it's come up here and it's tested again. So this is all bullish intention, right? Like it's testing resistance levels and it's not showing a decrease. This is never so slight because of that change in wicks, but it's not really showing a significant decrease in buying pressure. So if we end up above here tomorrow, we're above the trend, we open a new candle, we push up. If we push up early enough, we come here. If we push up really early, we come here, you know. But we expect this because of where we started. You just need to be in that mindset that euphoria is just the death of traders. If you see it pumping, you should always be going, is this going back? Where did we come from? Like, not to the point of not getting involved. Like, they talk about market cycles, and one of the periods of a market cycle is disbelief. So you don't want to be in disbelief. You just want to be in management mode. If you're pumping from the other side of resistance, just understand the time theory. The time theory is that I can pump from the underside of resistance as long as it's early in the candle. If I do it early in the candle, it's fine. It's going to come back, start taking profits on the way up. And that differs from disbelief. If it does it later in the candle, it's actually more sustainable, but it's often a smaller move. So if it just pokes up above this level just before the close of tomorrow, or in actual fact, it would actually be, it'd be this level. So right here, if it pokes up there just before the close of today, that's more of a sustainable move up because then it opens on the top side of the candle. And if you look at the, let's find it. Where is it? Somewhere. Where is it? Screens. Too much data. Who said that? Never too much data. Come on. Oh, wrong screen. Okay, here we go. So if we look at what we've got going on in here, what we want to know is we want to know which candles close between entry and target. These ones. Okay. And then we want to know which ones have not completed. These ones. And then we want to know which ones fit into minimum obligation holds. And here we have target of 76. So we've opened between the hold. This is 46 day. Entry 65750, which we probably hit a while ago. We've closed outside of the hold and it's got a target of 76135. So if we look that up, where's that demo sol chart? Don't want to mess with that one. Make a new one. Come on, create. Okay. Yeah. But no. Oh, wait, BTC. We were talking about BTC, weren't we? Duh. Okay, here we go. So we have got rid of these little labels. Here we are. So we've got this little hold hiding in here. Where did I get it right? We got to zoom in, make sure I got it right. Okay, that's our hold. And that's where we are now. So we nearly touched it on that bounce. Kind of makes you wonder if it's a rounding error, but this bounce again off it today in the last couple of days and the close outside of it for the new candle kind of gives us a pretty high probability chance. There's about 11 out of 500 of these things that haven't played out over time. Gives us a pretty good chance to get up to there. And if the price actually stays up around there, then it validates a whole bunch of other moves that are very similar to this across different time frames. So yeah, I don't know. It's hard to be completely bearish. It still looks like we're going to see some kind of pump up before we go down. So if we bounce off 65,750, which we kind of did, and we end up here at 76,135, or progress on to any of these other range levels, once you hit the bottom of a range, it's not totally uncommon to go back to 50%, even if you're in a declining market. So if this was the entry in quiet times, when everyone is not paying attention to crypto anymore, and they could have bought 65,000 to come up and end up minimum, say at 92, how many years does it take to make that amount of money on your money in the bank? I mean, even if you just forget that, what about just that? Come on. Answer, answer, answer. Get out the calculators. If you want to make it even trickier, consider how much time does it take to make that amount of value on your money, because value decreases with time due to inflation. So think about how fast you can make money, but think about how fast you can make value. It's even bigger. Ooh. All I had to say was money and value, and the viewers spiked. It's going down, Syndromes. No, it went down again. Okay, bots. All the bots cared about was I said money. It's in a little. Oh boy. Right. Cool. Let's get rid of all that, eh? Can't go up. It's bear market. Oh, hello, Neil. Sir. Neil's Netherlands. Guessing you're from the Netherlands. I don't know where to take that conversation from there, but still. Hello. Yeah. Just looking at this lovely little bounce. It's going to be really irritating if it was just that was the slightly algorithmic TP and it never quite got there for whatever reason, but because that would have been bounce, 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 done, but still. Yeah, same as me. There's so many things that are pointing here and above. You look at the respect of this level. It just, yeah, you just got to wonder if that was it. Bounce up. Thing is, during this pump, everyone would have chased it. They were still really excited. Now we've come all the way back down again. Everyone's given up. If you were gonna go up, it's not here where everyone's excited. It's here that everyone's given up. Here, everyone has open expectations. You're ranging. It shoots up. That's the pump. It comes back down again. They're all disheartened. They're all gone. They're capitulating. They're all bored. They've exited. Blah blah blah. But you know, now that that's happened, does it really do the actual pump? Is there a reason why they didn't quite touch that? Because it should come here. Yeah, I'm doing well. Yep. Been spending my days dealing with mostly property stuff, to be fair. Property stuff plus building things. No, you can do the 1% theory on basically anything. In fact, it works better on poop coins because they tend to move on a bigger percentage, but you just got to be a little bit more careful. In fact, it actually only really works if you look across more than one asset because Sol will just have these periods where it just moves by less than 1%, you know. But yeah, if you were to pick say 10 assets, so for me personally, I trade usually about 3 or 4 max at any given time because I just want to understand what the hell they're up to. But Ark's been really good, and then you'll get like a day where you make 10% on your entire portfolio on one Ark trade, and then it doesn't really matter if Sol doesn't do anything the next day. Who cares? It's you do have to sort of average it a little bit, but you can make it on Sol, but it might just mean you take 4 trades at 0.3%, pay your fees, and you've made your 1%. And other days you'll make an absolute crapload. Yeah, I'm waiting for this database to rebuild, and I want to get that up and running for everyone again. It's what's it doing now? I didn't turn off debug mode, so unfortunately I'm getting flooded with debugs and I can't see my progress bar. But it's busy. Let's just say it's busy. It's building all the various different time frames and it's building all the various different levels and once this is complete, then the origin scanner will kick back in. I could probably actually turn it on a bit earlier, but it'll just slow it down. It's got 17,353 unique levels collated as of when I last run the check. So just run it again, see what it's got now. It's got 47. It's got 47,000 levels sitting there at the moment, so I could probably turn it back on. I'm sure there'll be some trades pop up if we've got 47,000 levels to deal with. Let's see. That. All right. Let's give it a test fire. See if any of the database structures changed to the point that it doesn't work. Here we go. Yeah, so while it's been kind of boring like this, I've been trying to figure out hourly anchors, which has been much harder than trying to work out daily, weekly, monthly, that's for sure. Things like when do they so all the anchors that are factors, they're really obvious because they start at the start of the day, they end by the end of the day, and they always divide perfectly into a day. But how do they roll over the ones that can't factor into a day? And I've been trying to figure that out, which was the result of one of those trades I took this morning, which TP'd and made money, and that was good. And so far, the only thing I've figured out is that they are all very different to each other. So I found about 4 of them so far, which means there's only 20 more to figure out. Oh, getting this error popping up. Tell me if you can still see this. Getting an error popping up on the stream, which might be because I just kicked the entire origin scanner and everything back in, and it's probably completely draining every bit of power I have on my computer. YouTube is not receiving enough to maintain a smooth stream. As such, viewer experience is buffing. Uh-oh. Let me know. Let me know if you're stuck in a buffering circle. I may need to take a trade and buy another computer. Seems okay. Okay. I sometimes wonder about these errors that pop up, whether they mean anything. It's all buffering once. Buffering for a few seconds. Yeah. What it's up to. It's refreshing candles for 540 symbols. And it just sent out a lot of alerts. A lot. So 175 alerts it just sent out. Oh, we'll see if it keeps going. I made a couple of changes on the way it processes the state of different levels. So what I particularly wanted to capture is I wanted to capture whether something is broken, because previously broken was the end. Like, we didn't care past broken because we were only looking to take scalps off bounces. And what I thought about post that was, I thought, well, we kind of actually want to know when something breaks, because when an origin breaks, you're breaking the top or the bottom of a range. So it's a whole nother trade in itself. We can look to actually take the dump, or we can look to take the pump to the next level. So I wanted to build that in, but at the same time, I also wanted it, in building that in, we've also got this thing about, have we really broken the range? So if the origin exists on a 1 day, a 2 day, a 3 day, and a 4 day time frame, all at exactly the same level, then we've only broken the range if we actually break it on a 4 day. So I sort of had to build in multi time frame logic so that we could actually, first of all, know we've broken the range, but also know that we have broken it on its highest time frame, because that's what a deviation effectively is. When you see a price go above a trend and come back below it, or when you see a price go above a break level and hard close it but dump below it, it's because you've hard closed it on a time frame lesser than what it actually exists on, and you needed to have spent more time up there to have actually hard closed it, or in some cases you've not even hard closed it because the candle that equates to that of the higher time frame didn't open above it, it started below it, and it just spent time up there on the lower time frame, but in actual fact the level was higher time frame. Did that make sense to anybody in the group? Because that makes sense to me. So yeah, anyway, those are the changes. So most of it is like 99% internal, just to allow for us to adapt it to make more trades and safer trades. Key thing, safer trades, really. Don't want people to take a level if it's not the proper level to be taken. Yeah. While I was changing it, it was just spitting out levels that were based off incomplete candles. So if it was checking the candle and the candle was, so when you download a candle from an exchange, the problem is the candle has a high and a low and an open and a close, but it doesn't have a close time. So when you download candles, they only have open times. So most of the time, systems don't understand whether they're looking at something that's closed and complete or something that's open and still developing. So when I went to implement the broken structure, I had to work out that you can't break a level. You can touch a level with an open candle. Doesn't matter whether it's closed or not. It's touched the level. So touched or untouched only really needs to consider open logic. But if you are breaking levels, you need to consider closed logic, because a price or an open candle can go above a level. It can even open above a level, but if it closes back below the level, it hasn't broken the level. So a lot of the changes I had to put in there in the last couple of days were to do with distinguishing open logic versus broken logic, and therefore giving us the things we need to create the states to find breakout trades in the future. That's the geeky technical perspective. Nerds. Nerds rule the world. Meanwhile, everyone's shorting. Let's go take the shorts. The hold level thing, though, is really cool. And I kind of want to do that. I want to finish that, but I want to get the break level thing absolutely perfect first. So we get break levels good, we get origin levels good, we get breakout trades good, and then I have multi-time frame range levels kind of all ready to go. Huge data files, absolutely massive. Too big to share, unfortunately. Can't copy and paste these ones into Discord as much as I really want to. I've got to, let's have a look. Where are they? This is huge. So this is about a 200 megabyte CSV, which is probably going to stop my live stream if I try to open this, but we'll see. Dun, 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 dun. This is taking ages to open. Come on. Okay, while this really massive CSV file opens, I'm going to go find more refreshments. Okay, I'm back. It opened. All right, so oh, and it's opening again. Slow time. Okay, here we go. All right. Anyone got a token? Pick something. First one to say something. Let's pick it. It's 540 of these things in here, so it might be in here. Might be, probably is. 6 viewers. Oh, everyone left. 4. Okay, buffering, maybe. Oh, it's dying. Yeah, okay, I'll close this. Let's see. Might just be too big. Yeah. Okay, so I'm starting to think I can't show you all the fun stuff. Oh, and then someone says Arc. Now I've got to open it again. So, damn it. Okay, bear with me. I'll try to get this thing up and running. How do I do this? Yeah, everything's kind of grinding to a halt. Come on. Open my file. Come on. Hurry up. Work. Yeah, I don't know if I can actually manage to do this and have everything running and be on a live stream all at the same time. It appears that 128 gigs of RAM and an i7 processor is just simply not enough. Wowza. Let's try again, eh? Let's try again. Maybe second time's a charm. Maybe. Come on. Yeah. Maybe, maybe not. All right. Drink break. Come on. Okay. Don't convert. Don't. Okay. And we wait. So we want Arc, Sol, or Sui. We've looked a lot at Sol. Let's look at. Well, we can still look at Sol, I suppose. Do 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 do. Interesting. If I look at the live stream preview, I can see the data. If I look at my own screen, it's just a white screen. Very strange. Okay, here we go. All right, let's look at Sol. Oh, it's that badly delayed. So this is the 23,778 hold levels out of a little over 500,000. These are related to Sol. Yeah. Elon, save me. Give me some new compute. I'll do some videos for you and pretend that you are the god of everything. Hey. Elon lover. He is actually a really super intelligent human being. But anyway. Right. Try to expand the columns. There we go. So, what should we do? Should we look for levels? Let's look for levels. Let's go sort and highest to smallest, highest to lowest. Oof. Okay, right, we've got some levels. Shit, who would have thought? There's a hold all the way at the top there. Well, that created a bit of a problem for us, didn't it, at the time? Eek. Where are we now? Should we do a price range thing just to make this a little bit faster? Because that's a lot. So a lot of these levels are completed. So they've gone through their entire moves. So we go. Come on. This is extremely laggy, and I'm sure probably everyone's feeling that right now. Let's see. Let's try to... Oh, did I just screw that up? I think I did. Let's go less than 100. It'll narrow it down a bit. Cool. 1, 2. Right. This is a bit more in the range that we exist in. We don't really care about completed ranges, so let's look at getting rid of those. That brings it down a bit. And so most of these other ranges are either still in play or haven't been touched yet, like this one at 94. More at 94. So if we look at this, we've got, these are basically hard closed hold levels that have not been touched. So if you think about it from a risk perspective, they were created, they've not been touched, they are capable of creating ranges. So if we look at these ones, these have all been touched. So we want this one, which is completely untouched resistance, sitting above price or roughly around $100. These are our really solid resistances. So we are currently at 83. I haven't actually updated this report for a couple of days, so the ones we would have bounced off would have been all this stuff down here about 78 because we haven't updated that because we would have touched that. And bullish, 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 bearish. Okay, so we probably had some kind of rejection on the chart about 83,919 and above, because these are all the bearish holes that existed. So if we look at that chart, so 83,919, if we go back and look at Sol, after the dip, where did we get to? So about here. So once we got to about this point, we moved into that bearish resistance, which was, funnily enough, what did that. So that's, so we've touched, have we got to 84.858 yet? Let's see. How high did we get? 84.930. Okay, so if we were to update this report now, all of these would have actually been touched. And our next bracket of resistance starts at 85. But the really big stuff, like the 3-day, at 86. $87, $88. That's our next really big one. They're all quite small. We've got daily there at 88. Two-day, 91. That's a pretty reasonable target because we did bounce off that 2-day range trend. So we could be coming up to try and hit that. Pretty reasonable. Mostly smaller. All the way up. So you'd probably look at that and go 88 and 91. Or sorry, 86, 88, and 91 are kind of our biggest levels sitting above us that may reject, and they're all based on this timestamp existing. They're all hard closed, so they're all levels that we have spent enough time under. So this is going to be the next thing that we release to the CSV Data members group. Basically, hold levels and range levels that are hard closed and polarized. Once we've got the origin thing happy, 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 joy, joy, this will be the next thing. Massive, massive database. Anyway. Do 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 do. Yeah, need a bigger computer. What's a number? Is the buffering caught up yet? Probably not. All right, have a drink. Let's see. Compressing. Holding the range trend. No hold level. Upside target's already hit. Probably going to break out. Delay-ish. Yep. Come on. Give us your shorts. So those levels we just spoke about, 86, 88, and not up there anymore because it's moved over to the high time frame. So if we look over here at the high time frame, do we have liquidity up to 93? Of course we do. So up to 91, possible. Yeah, I think opening 200 megabyte data files on live streams is not good for buffering. Yeah, it comes back when I close it. it's just too much. It's just too much. I've got a 48 thread process running in the background right now, just rebuilding that origin database. And then if you open up a 200 meg data file on hold levels and run a live stream and have Discord open and have 4x 4K monitors and have, at a rough approximation, 30 TradingView tabs open, it's kind of a lot. Probably doesn't go so well for buffering and memory and being a good fluid streaming shitfluencer. Audio better work. It's an expensive mic. Otherwise, how could you ever hear me burp? What are we doing? The 1 minute chart really looks like it wants to just break out. The 4 hour chart just looks like a 4 hour chart. How much longer? 3 hours and 38 minutes to go, so that can't tell us too much. Let's do this 4 hour. 15 minutes looking good. Abuse that trend. Abuse that trend. I mean, everything I've looked at, I just can't understand being short-term bearish. I can understand the bigger picture is that we're going to go up, we're going to take liquidity, and we're going to go lower. But it just doesn't seem like we go lower from here. There's just, if they wanted to go lower, it would have been way easier to do it just by closing under some big trends over the last couple of weeks. But instead, what they've done is they've moved those trends to be below us to support the price. And because of that, we've had strength. So I think too many people got bearish too quickly, and therefore a bear market rally is just going to happen to liquidate them. The problem is when it turns. So you should have your TPs and you should have them set at these key resistance levels, because when it turns, it will potentially turn really fast, because it's not like they want to go up. The real thing is they want to go down. It's just greed wants to go up. People want to take out those shorts to open large positions to then run down. So once greed has fulfilled, price will reverse very quickly. So just don't be don't be looking at your phone every day and deciding whether to sell. Make your decisions in advance and just stick to them. And if it goes higher, don't chase it. Just wait. Ooh, burped. Hmm. I can't even open this. Hmm. Do 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 do. Do, 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 do. What's going on? Tesla looks pretty nasty, but you probably won't. You probably won't have confirmation till next week. Who wants to see a flex? Who wants to see a really big flex? Today's flex. Who wants to see it? If 3 people say yes in the chat, I'll put a little screen snip into view for 10 seconds. Dun, 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 dun. Dun, 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 dun. Dun, 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 dun. Nope, nope, no one. Okay, okay. Fair enough. Error, YouTube is not receiving enough. What's going on? What's going on? Yeah, all right. So get up above that, get above that, get above that, go challenge that. It's kind of stuck. 55 seconds. Get above that trend. Yes, let's go. Okay. All right, delayed response. Here you go. This is not the absolutely normal. This is probably above average. Okay, but you just keep doing what you do. One, two, three, 4, 5, 6, 7, 8, 9, 10. Bye. Let's bounce. Kind of delay-ish price action, really. Just bouncing off the hold. Hasn't hit the break. Hasn't hit the origin. Hasn't hit the origin. This one up the top here has already kind of been tested, so it's really this one is the stronger one. And compressing. Down here you got your origin. So let's go box being this to this. That's your first box. Inside there we want to see what have we created. So we've created this origin, which looks like it might be breaking. And we created this in range one up here. So that's the middle box. And this is the most messed up thing you'll ever see about charts, is that the symmetry, excuse me, between here and here is crazy. It's like they plan where the middle is going to be of the bigger range when it's created. If you were to just take origin to tested origin, so there to there, come back to the halfway point, and then trade to the top side and the bottom side, you'd probably win just about every time, because nearly every single range that's ever created within a range is initially created with the same amount of symmetry to the top and the bottom. And then beyond that, it's about where does it break. So like at the moment, it's looking like it wants to break to the downside. And so maybe we get a bit more of a pullback than what we got before. That looks like a really big phallic symbol. Should I? I'm going to do it. Okay, delete that. Just in case there's any women out there, we'll delete that. Are there any women out there? I'm hopelessly single, but I like it. You didn't see the flex. Good, good. The beauty of a flex is when people don't see it. Did that work? You're back? See the screen? Yeah, nah. Nah. I still can't see the preview. We see it, but it's frozen. Can you see green boxes that look like a sideways male thingamajig? Boxes on screen. Okay, so you can see boxes. Okay. I can't even see boxes. Oh, there we go. It just updated. Right. Okay, so that is ranges within ranges. Just so you see, so bigger range created between origin and origin, smaller range. They almost always create the bigger range and then create the other one with symmetry for the breakout, top or bottom. It's just this weird thing that happens, and then they start to produce ranges that move more in one direction, which in this case is moving to the downside. So it just shows that they want to try and continue to break down. Nice. Yeah. I think I'm running too many things currently on the computer, quite possibly. Still updating databases and stuff in the background. So it's giving me warnings about this. So it's quite possible that it just sucks. But what you all missed out on was this brilliant drawing. It goes like this. It goes, this is how ranges work. Bye. That's how ranges work. Mm. Yeah, okay. Streaming is rooted. Okay. Uh, hmm. Wonder if it's just. I don't know if I can continue if this thing is not going to stream properly. I might just have to wait for this database build to finish. Whee! So someone saw the picture. Yeah. Go back to where we were like 30 minutes ago. Dump. Good night, sir. So now if we look at the hourly, we've probably got, where are we? In the hourly we are. Okay, so we go 15-minute to the hourly, we've got this range. And then inside of that, we've got so arguably it's that because it did come up here to test the top side, and that became an origin. So that became the hourly. But then we've created another one here. So this is what we're in now. So we've kind of moved from creating an hourly range and looking like we're heading to the upside to now being more towards the middle and testing the downside. See how low it goes. It might take a long. See what happens. Okay, close enough. Okay. Where are we looking? We're looking probably there. 82770. God, I have to close one eye just to focus. This is hard. Do 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 do. Wait for it. Probably the other way around, actually. I'm using the new logic to actually continue to build the bot. I can't really be bothered with a bot if I have to keep an eye on it, but the more advanced this logic gets, the more I do not have to keep an eye on it. So, yeah, more the other way around. NY woke up early? Maybe. Sometimes when it dumps into New York, it's because New York wants to pump it. Ultimately, New York is just about creating or taking liquidity. It's either going to create it through its price action for the next market, or it's going to take it because of prior market activity. But it just seems lately that New York just wants to sell everything to death. But that's mostly just because pre New York opening things go up, so therefore it does sell it to death. Dun, dun, dun. Right. Got We've got the amount of time on this live stream that it takes me to drink 2 more drinks, but I'll go to the bathroom first, which will extend the time. So see what happens. Up only. Maybe down. What's going on? Do I have an opinion on metals? No, not really. I traded copper just because it popped up in the Origin scanner, and it was just literally a bounce. And I actually didn't even remotely relate to the fact it was actually copper, like the metal. I thought it was just some shitcoin called copper, but it was actually the copper metal synthetic stock that was tradable on the exchange. Yeah, nah, not really. I mean, everything is just kind of the same. It moves the same. It does the same things. Follows the same rules. Just yeah, just the same. So if copper's moving, you trade copper. If Sol's moving, you trade Sol. If BTC's moving, you trade BTC. Really, just whatever's moving. key thing is you need to be able to sell it at a price and buy it back, and hence a short, or you need to be able to buy it at a price and sell it at a price and hence a long. You just needs to be moving and have some kind of clear confluence behind its movement. Mm. Do. We got 6 people. You dedicated few. You band of brothers. Man. If we were in a bull market, even as like a absolutely miniature shitfluencer, there would be like 30 people watching right now in a bull market. We got 5. It's also quite possibly because it's just laggy as, but still. What's going on X? We got a Trump tweeting? No. So 4 minutes and 48 seconds and just hugging the line. So do they push it down just enough to get it under there and keep going, or do they just get enough people to capitulate and close here and bounce? 4 people. I'm gonna type something and say it at the same time. Is the lag really bad? Question mark. Just put that question mark is when I hit enter. Put it in the chat. Bearish. Freezes for 10 to 15 seconds. Eesh. Yeah, okay. Might need to buy me some more server time. Alright, see you, Neil. Audio's out of sync. Yeah. I think I've pushed this this computer probably a little bit beyond what it's capable of. especially right now. So when I talk about like Elmo fans, it's like the high frequency algos kick in, just trying to absolutely drive this price down if they can. As we get closer to close, they just want it to be under here. This is super loud fans time right now.